Hey, what is going on, guys? Edward here, back with another video. And in this opportunity, I have decided to drop a free course based on price action. Since I've been getting a lot of questions, Eduardo, you're only doing ICT now. What about normal price action? Just maybe some indicators in there, throwing some indicators on the chart. And so my answer to that is I will actually do this course and just this free price action course. Very simple. And if you are a beginner, you're watching this for the first time, you're trying to learn price action. Uh, this is going to be the easiest course you're going to find out there on YouTube, to be honest. Okay. Um, why is this actually going to be the easiest? Well, because I am going to show you how to use just a few things that the things that you actually need to focus on, and just ignore a bunch of things that are out there, because I know and I understand that trading is not easy, right? Trading is definitely not easy. It's like a career. You're gonna have to study for for a long time, right? Before you even start making money. Okay, I want to make your journey a little short, right? What do I mean by that? I want you to start understanding price action faster, to get you from point A to point B, which is making money, being profitable at some point. All right. So my job is to teach you the easiest way, price action. Okay. Now, as I mentioned, if you're a beginner, you're watching this for the first time, you might say, "But hey, Eduardo, I mean, I've seen a lot of shit, on Google, on YouTube, and I've seen a lot of people talking about a lot of things, different candle patterns, and I know I get it. If you go on Google and you type in candlesticks patterns, what you're gonna find is there are a bunch of them, right? It's going to take you forever for you to learn all of this stuff, to start actually understanding it. You're going to be so overwhelmed because there's so much information that you need to learn, right? If you want to actually understand price action. And to be honest, I don't care. I don't care about these other candle patterns. I don't care, because at the end of the day, if you focus only, let's say, on maybe one candle pattern or two candle patterns, that's all you need, man. You don't need 16 candle patterns. You don't need to learn all of that shit. You don't. You really don't. You know what I mean? So you see right here on the left, top left corner, right here, that I'm just showing the bullish engulfing candle and bearish engulfing candle. If we're buying, you want to see a bullish engulfing, and you want to, if you're trying to sell, you want to see a bearish engulfing. Okay, that is it. That is all I'm giving you. That is all I'm telling you. From this point, it's up to you if you want to follow this. Okay, discipline is going to be very important here. Okay, you're gonna have to stick to the plan. You're gonna have to follow what I'm going to show you if you really want to get somewhere. All right, now, understanding, okay, price action. I'm going to try to break this course in a few videos. I don't want to make it way too long, again, overwhelming with too much information. I just want to go straight to the point. All right. So there are different types of trading. You may have heard of ICT, this smart money techniques, smart money concept, right? Retail trading, smart money concept, all that thing. It's causing a lot of arguments and throughout YouTube and the internet. So what is the reality here? That every strategy, even SMC or normal retail trading, is just another strategy. Okay, it is just another retail strategy. Okay, I am personally trading right now ICT concepts. I like it and I'm sticking to it. Okay, but I'm going to show you right here that just price action right here, this technique is really going to help you, and you could actually make money with this. All right, so Let's get it. You're going to find out there are different types. The market moves in different types of waves. You're going to find that, for example, in the first trend that I have right here, you're going to find sometimes the price after an impulse and has a correction, impulse, correction, impulse, correction, impulse. That's how normally the market moves. Okay, it moves in waves. Okay, you're going to see, I don't know if you can see right now, but you're going to see what's the difference. You might be wondering, what is the difference between this trend and this trend? If you're a beginner, maybe you don't see the actual big difference. But if I mark up a little support or resistance right here, you're going to see what happened right here in this trend. You see the difference in this trend actually broke that resistance, okay? What is called resistance. After this high was created, was broken, came back to the zone, but sort of broke it, but then pushed up again, right? And in this trend, we see that price actually respected that support and then pushed up. Then why is this happening here and not happening here? What is the thing here? What is the difference? Okay, so this is where we go into um, SMC, what is called the smart money concepts, and normal retail trading, which is just basically trading support, resistance, breakouts, trend trading, right? So this trend right here, normally the pullbacks are going to be a lot deeper. Why they're so deep, right? The price went deeper right here because most likely, price is reaching for a fair value gap or an imbalance, what it's called. I'm just letting you know about this. I don't want you to learn fair value gaps, imbalance. What is that? You might be wondering. I don't want you to pay attention to that because that's part of SMC. I'm going to teach you uh, how to do this type of trading. Okay, this course is not based on SMC; is based on this type of style of trading. Okay, so it's going deeper, right? Probably, maybe even to an order block, right? If you have heard of order block, is basically the same thing as SMC, smart money concept. It's all the same thing, right? So that's the difference. Price is doing much deeper pullbacks into this fractal from this low to this high. Price, if you use the Fibonacci, price is pulling much deeper, right? Inside the discount area. Now, if you go in this chart, you see price is actually probably the same, probably reaching the 50%, reaching halfway of this entire impulse right here. This impulse, price is pulling back at least at 50%. Price is retesting a previous resistance. Now it's becoming a support. And here we can actually look for a buy. Okay. This is what this course is based off. So this is just to let you know. Okay. What is the difference between these two trends? Right. You see, when the price created this high, again, disrespected. Let me do it this way. Price sort of broke that resistance, that support right there. It did a little fake out to the downside, but then pushed up, back up again, right? But if you see on the right side, these type of trends is they are respecting, that support, that resistance right there. Price respected it right here, giving us an entry to go buying. Okay, so this course is going to be based not on this. So forget about that. We're going to be paying attention to this type of trading. Okay. Especially, we want to trade when markets are trending. Okay. You want to trade when markets are trending. Even though with this technique that I'm showing you right here, you can still trade even, let's say price is consolidating. You wait for the breakout and you enter the breakout. So let me go ahead and give you some examples for that. So right here, what we want to see, this is what we want to see, right? Normally, price having an impulse, a correction, we want to see a break. This break, I recommend you guys to pay attention on how the break happened. the break happen with the small candles, very little candles, or is the break happening with one single candle, right? Let's say normally it's a green candle if the price is bullish, the trend is bullish. So we want to see a big candle closing above a previous high that confirms a nice break to the upside. Okay. Now, our job is to wait for after the price having this impulse right here and apparently breaking the structure. Our job is to wait patiently for the retest. Once the price is back in this zone, we're going to mark up a little invisible zone right here. Once the price is back in this zone, we're going to wait for our bullish engulfing. Okay. Again, forget about all these candle patterns. Forget it. You don't need them. Okay. Now, if you're watching this video for the first time, but you already, let's say you already know some, you have you have some knowledge and you already understand some of this type of candle patterns, then you may use them. If you're not, if you're new, completely a beginner for the first time, then you don't forget it. You don't need to learn all those candle patterns. All you need is that bullish engulfing. What is that? You want to see price creating a bearish and then boom, big bullish engulfing. It's a big candle engulfing the previous one. You want to see a red candle and then a big green candle. Now, where's going to be the entry? The entry is going to be at the closure. You have to wait for the candle to close to confirm that that is your trigger. That is your candle pattern. Okay. Stop loss below the zone, below that previous low. Take profit. You can go for either 1 to 2, 1 to 3 in this case. Okay. Probably in the next video, I'm going to show you the how I use the Fibonacci to sort of project my target. Where am I going to be aiming my target? Okay, so that's going to be for the next class, for the next video. But at the moment, this is pretty much what we want to see. Right here on the bearish scenario, same thing. You have a support, price all of a sudden stops, then does a little pullback, then breaks. That break has to have a very strong bearish candle closing, preferably. Then you wait for the price to pull back, retest the area, okay? And then you wait for your trigger, okay? In this case, your trigger is your bearish engulfing candle, in this case, right? So you want to see a green candle right here and then a big red candle right here. Okay, then where is your entry? As soon as that candle closes, your stop loss goes above, a few pips above, and then 1 to 2 or 1 to 3 risk to reward, depending. I'm going to explain later how you can target that. But this is technically it. Okay, this is what we want to see. All right, let me give you an example now that we have right here, understanding the type of entries. So we see in the chart, like when does the break happens? Okay, understanding that you see the price recently created this sort of equal highs right there. That's a nice resistance, little resistance right there, right? Look at what happens after that resistance was created. We have one touch, two touch, and then boom, finally price actually breaks to the upside, right? Now, sometimes in some setups, you have to understand this. Sometimes after the break, the price will do this, like it will push very high, and then later on will come back here, touch, give you a bullish engulfing candle right here, and then boom, you can buy. Sometimes it's going to be a little shorter, like you're seeing right here. Price recently broke. After the break, it just took maybe two candles, one candle, you can call it an entire candle above that previous zone, and then pulling back and then immediately giving you that bullish engulfing. You see, sometimes it's going to happen like that, very fast. Okay, it doesn't matter the time frame. You could be in any time frame. These setups, these formations, you can do it in 1 minute, all the way down to the monthly. It's the same. Okay, it is basically the same. So understanding that where your entry is going to be as soon as that candle closes, stop loss below the swing low, take profit 1 to 2 or 1 to 3, depending. As I mentioned, I'll show you how to use the Fibonacci later. But this is technically the type of entry, and understanding how the break happened. You see how strong the break was? You have two strong candles closing above, full body of the candle closing above previous highs. Okay. Now, oh, Eduardo, I don't like drawing the zones. I actually like drawing a line. I don't care. That's valid too. At the end of the day, what matters is that you understand that it's not a line, it's not a box, it's an area. Okay. This is an invisible zone, and price can react anywhere in this area. So have that in mind. Okay. You want to maybe do a line because it's less thing on your charts. Fine. Cool. That's cool. You know, but understand that where the break happened, when the retest is happening, and all you need is one trigger, one candle pattern. That's literally all you need. All right. Let's go to the next example right here. We see sometimes as well, sometimes price could be either consolidating or maybe it's trending to the upside. Look at what happens right here in this scenario. See, again, price creating a little resistance. And then we have this huge impulse right here, big break to the upside, right? All we have to do is wait for price to pull back. And when it pulled back, did you know the price is touching the zone? Probably what you want to do is set alerts. If you know the price broke above and you're on a 5-minute time frame, what you can do is set a bunch of alerts in this area in case you don't want to be waiting until price actually pulls back. All you have to do is set alerts. So once your alerts get hit, you understand, oh, okay, let me go ahead and see the charts to see what's going on, what's happening, right? You don't have to be on the charts all the time. Well, let's say this is a 1 hour time frame. It doesn't matter, right? You're in a 1 hour time frame. You know that after this huge break, price is going to take maybe 4, 5, 6 hours, 10 hours to probably pull back. So all you have to do is set an alert and wait. Do something else. Maybe watch another pair. Okay. So I want you to see right here what happened. Where was the bullish engulfing? You see that right here, pretty much this was a bearish candle. And then we have a little bullish, another bigger bullish right there. Nothing. I got no trigger right there until this moment. We have a bearish candle, and then we have a big bullish candle right there. So I want you to understand the difference, right? Sometimes the trigger it's not going to happen just right away. It can happen somewhat later. Okay, not too far away. I don't want to catch this bullish engulfing that is right here, right? If you miss this one, I'm gonna, oh, you know what? I'm gonna take this one anyways because that's a bullish engulfing. Look where your entry is, okay? Be careful. I don't want you to do that thing. This is very stupid. All right. So right here, this would have been your entry. Where's your stop loss? Long position is as soon as that candle closes. Your stop loss is going to be at the bottom of this low, or you want to protect it below the zone. Okay, that's fine. And you can go for 1 to 2 or 1 to 3 risk to reward based on that. But this is normally, this is another best cool example. So I'm going to leave this video, as I mentioned. I'm going to make a couple of videos, classes based on this, and just going to leave it until here, and I'll continue on the next one on the next day. So I hope it makes sense. I hope you guys are understanding. Please make sure to subscribe if you're new so you can stay tuned with the next videos that are going to be coming in on this class. I'm going to be creating a playlist. The playlist is going to be at the top right corner. So probably by the time you're watching this, the other videos are going to be online already, so you can actually continue with the playlist. All right. So thanks again, guys, for watching. I'll see you in the next video. Take it easy.